The new wage code protects workers by guaranteeing a fair minimum wage.
It ensures everyone gets paid on time.
And it makes the rules simpler.
Simpler and fairer for everyone.
Welcome, everyone. Today, we begin our session on the Code on Wages, 2019. This is an important law that was passed to amend and bring together all the rules relating to wages and bonus payments, along with matters connected to them. The code received presidential assent on 8th August 2019. Let us explore this landmark legislation together. Let us start with a quick overview of this code. The Code on Wages 2019 is a landmark consolidation of 4 major labor laws into a single unified law. It was enacted in the 70th year of the Republic of India. The 4 laws that were repealed and replaced by this code are the Payment of Wages Act 1936, the Minimum Wages Act 1948, the Payment of Bonus Act 1965, and the Equal Remuneration Act 1976. In simple words, 4 separate laws have now become one, making it easier and clearer for everyone to understand. We now enter Chapter 1 of the Code, which covers preliminary provisions. The very first and most important point here is that this code extends to the whole of India. This means every state and union territory across the country is covered under this law. Let us now look at some key definitions under this code. The first term is accounting year. This refers to the year that begins on the first day of April each year. The second term is establishment. This means any place where any industry, trade, business, manufacturing, or occupation is carried on. This definition also includes government establishments. These definitions are important as they set the foundation for understanding the rest of the code. Continuing with key definitions, this slide introduces the term appropriate government. The term appropriate government refers to the authority, either central or state, that has the power to take decisions, issue notifications, and set rules under this code. Who the appropriate government is may vary depending on the type of establishment and the nature of the work. This slide explains 2 important terms: contractor and contract labor. A contractor is a person who either undertakes to produce a specific result for an establishment through contract labor or supplies contract labor as human resources. This definition specifically includes subcontractors. Contract labor means a worker who is employed in connection with an establishment's work by or through a contractor, and this includes interstate migrant workers. However, there are certain exclusions. Workers who are regularly employed by the contractor for their own activity and whose employment includes mutually accepted employment standards, such as permanent employment, periodical pay increments, social security coverage, and other welfare benefits as per law, are not considered contract labor. This slide covers the definition of employee under the code. The term employee is defined broadly to ensure maximum coverage. An employee is any person employed on wages by an establishment to perform skilled, semi-skilled, unskilled, manual, operational, supervisory, managerial, administrative, technical, or clerical work. The definition covers employment for hire or reward, whether the terms are expressed clearly or implied. It also includes individuals who are declared as employees by the appropriate government. However, 2 categories are specifically excluded: apprentices engaged under the Apprentices Act 1961 and members of the Armed Forces of the Union. Now, let us understand who is an employer under this code. The definition is wide and covers many types of employers. In general, an employer is any person who employs one or more employees, directly or indirectly, in their establishment for hire or reward. For government establishments, the employer is the head of the department or an authority specified by them. For local authorities, it is the chief executive. For factories, the employer is the occupier or the named manager. For other establishments, it is the person or authority with ultimate control, or the managing director if affairs are managed by one. The definition also includes contractors and the legal representatives of a deceased employer. This is a very important definition under the code: the definition of wages. Wages means all remuneration, whether in the form of salaries, allowances, or otherwise, that is expressed in terms of money, or capable of being expressed in money, and that is payable to a person for their employment or work done, provided the terms of employment are fulfilled. Wages include 3 key components: basic pay, the fundamental and consistent part of an employee's salary; dearness allowance, an allowance paid to help employees manage the impact of inflation on their cost of living; and retaining allowance. If applicable, this is paid to retain an employee's services, often during periods when work is not available. While we have seen what is included in wages, the code also specifically lists what is not included. These items are not counted when calculating statutory wage obligations. The exclusions are A. Bonus payable under any law. B. The value of house accommodation, light, water, medical facility, or other excluded amenities and services. C. The employer's contribution to pension or provident fund, including accrued interest. D. Conveyance allowance or the value of traveling concessions. E. Amounts paid to meet special expenses due to the nature of employment. F. House rent allowance. G. Remuneration payable under any award, settlement, court order, or tribunal order. H. Overtime allowance. I. Commission payable to the employee. J. Gratuity payable on termination of employment. And K. Retrenchment compensation, retirement benefit, or ex gratia payment on termination. Wage calculation, the 50% inclusion rule. Even though certain components are normally excluded from wages, the code has an important rule to ensure fairness. This is called the 50% inclusion rule. Here's how it works. If the payments that are generally excluded from wages, as listed under clauses A to I of the definition, together exceed 1/2, that is 50%, of the employee's total remuneration, then the amount that exceeds this 50% limit will be deemed as remuneration and added back into the definition of wages. Additionally, the central government has the power to adjust this 50% threshold to a different percentage by issuing a notification. This rule ensures that a substantial portion of an employee's total pay is always protected under the wage definition. Special inclusion for equal wages and payment. This slide covers special provisions regarding the inclusion of wages for purposes of equal pay and payment. Points 2 and 3 of this provision form part of the broader framework that ensures equal wages and fair payment practices under the code. These provisions strengthen the commitment to fairness and non-discrimination in all wage-related matters. Remuneration in kind and wages. This slide clarifies how remuneration received in kind, that is, in a non-monetary form, is treated under the definition of wages. If an employee receives remuneration in kind, its value will be considered part of their wages, as long as it does not exceed 15% of the total wages payable to that employee. This provision is in place to prevent excessive non-monetary benefits from distorting the true wage calculation, while still acknowledging that employees may receive some benefits in forms other than money. Definition of worker. Now let us look at the definition of worker under the code. A worker is any person, except an apprentice, who is employed in any industry for manual, unskilled, skilled, technical, operational, clerical, or supervisory work. The definition also includes working journalists and sales promotion employees. However, the following are specifically excluded from this definition: personnel from the armed forces, employees in police service, prison officers, persons employed mainly in a managerial or administrative capacity, and supervisors who draw wages exceeding 15,000 rupees per month, or as notified by the central government. Same work or work of similar nature. This slide explains what is meant by same work or work of a similar nature. Work is considered the same or similar when the skill, effort, experience, and responsibility required are the same, when performed under similar working conditions by employees, and where any difference between requirements for employees of any gender is not of practical importance in relation to terms and conditions of employment. Additionally, if a dispute arises about whether work is of the same or similar nature under Section 3, it shall be decided by such authority as may be notified by the appropriate government. Chapter 1, Section 3, Prohibition of Gender Discrimination in Wages. We now come to a very important provision, Section 3, which prohibits gender discrimination in wages. No employer shall discriminate among employees on the ground of gender in matters relating to wages for the same work or work of a similar nature. Further, employers must not reduce the wages of any employee in order to comply with this provision. Employers also cannot discriminate on the basis of sex while recruiting employees for the same or similar work. This is a strong and clear protection for all employees. Chapter 2, Minimum Wages. We now move to Chapter 2, which deals with minimum wages. Section 5 of this chapter clearly states that no employer shall pay any employee wages that are less than the minimum rate of wages notified by the appropriate government. This is a non-negotiable requirement. Every employee is entitled to at least the minimum wage. Fixation of minimum wages. Section 6. Section 6 deals with how minimum wages are fixed. There are 3 key aspects. Point 1. Time work or piecework. The appropriate government fixes minimum wages for time work, which may be set by hour, day, or month, or for piecework. For piecework, a minimum time rate basis must also be fixed. Point 2. Skill and geography. Minimum wages are primarily based on skill categories. unskilled, semi-skilled, skilled, and highly skilled, and may also consider the geographical area. Point 3, arduousness. The government may additionally consider hazardous occupations, work in extreme temperatures or humidity, or underground work. The code also states that the number of minimum wage rates should be kept at a minimum as far as possible. Components of minimum wages, Section 7. Section 7 outlines the structural components that the appropriate government may use when fixing or revising minimum wage rates. There are 3 options. Option 1, basic rate plus cost of living allowance. A basic rate of wages along with a cost of living allowance, adjusted periodically based on the cost of living index. Option 2, basic rate with or without cost of living allowance plus concessions. A basic wage with or without the cost of living allowance plus the monetary value of concessions for essential commodities provided at subsidized rates, if authorized. Option 3, all-inclusive rate. A single all-inclusive rate that covers the basic wage, the cost of living allowance, and the cash value of any authorized concessions. Both the cost of living allowance and the cash value of concessions are computed by an authority appointed by the appropriate government, following specified directions and intervals. Procedure for fixing and revising minimum wages, Section 8. Section 8 explains the procedure for fixing and revising minimum wages. There are 4 key steps. Step 1, method selection. The appropriate government may either adopt a committee-based approach or issue proposals for public comment. Step 2, committee composition. If a committee is formed, it must include representatives from employers, employees, and independent members. Step 3, final notification. After reviewing the feedback received, the government notifies the revised wage rates. Step 4, periodic review. Minimum wages must be reassessed at least once every 5 years. Floor wage, Section 9. Section 9 introduces the concept of the floor wage. The central government has the power to fix a floor wage by taking into account the minimum living standards of a worker. Different floor wages may be fixed for different geographical areas. An important safeguard is that minimum wages fixed by state governments shall not be less than the floor wage. If a state's minimum wage is already higher than the floor wage, the state government shall not reduce it. Before the central government fixes the floor wage, it must first consult the Central Advisory Board. Wages for partial and overtime work. This slide covers 3 important situations related to wages. Under Section 10, partial workday, if an employee works for less than the normal working hours in a day, they are still entitled to full day wages, unless the absence was due to the employee's own unwillingness to work. Under Section 11, 2 or more classes of work, if an employee performs 2 or more classes of work that have different minimum wage rates, wages shall be paid at the applicable minimum rate for the time spent on each class of work. Under Section 14, overtime. Overtime work must be paid at the overtime rate, which shall not be less than twice the normal rate of wages. Fixing hours of work, Section 13. Section 13 allows the appropriate government, when setting minimum wages, to also fix the hours of work for a normal working day. This includes defining break times, providing for a paid weekly rest day, and requiring payment of overtime for work done on rest days. There are also special rules for certain situations, such as work done in emergencies, work done before or after the main job, jobs that are mostly stop and start in nature, work that must be completed before the shift ends, and work that depends on changing natural conditions. Chapter 3, Payment of Wages. We now move to Chapter 3, which deals with the payment of wages. Under this chapter, all wages shall be paid in current coin, currency notes, by check, by bank credit, or through electronic mode. The appropriate government also has the power to notify specific establishments and require them to pay wages only by check or bank credit. Fixation of wage period, Section 16. Section 16 deals with fixing the wage period. Every employer is required to set a wage period for their employees. The wage period can be daily, weekly, fortnightly, or monthly. However, an important condition is that the wage period must not exceed 1 month for any employee. Different establishments may operate on different wage periods, which provides flexibility based on the needs of the industry or business. Time limit for payment of wages, Section 17. Section 17 sets strict timelines for paying wages based on the wage period. For employees paid on a daily basis, wages must be paid by the end of the shift. For employees paid on a weekly basis, wages must be paid on the last working day of the week before the weekly holiday. For employees paid on a fortnightly basis, wages must be paid before the end of the second day after the fortnight concludes. For employees paid on a monthly basis, wages must be paid before the expiry of the 7th day of the following month. There is also a special rule for employment termination. For employees who are removed, dismissed, retrenched, or who have resigned, or who become unemployed due to the closure of an establishment, their wages must be paid within 2 working days of the event. Deductions from wages, Section 18. Section 18 governs deductions from wages. No deduction shall be made from an employee's wages except those that are authorized under this code. Authorized deductions include fines imposed on the employee, absence from duty, damage to or loss of goods entrusted to the employee, house accommodation supplied by the employer, amenities and services supplied, recovery of advances and loans, income tax and statutory levies, subscriptions to Social Security funds such as Provident Fund, pension and health insurance, payments to cooperative societies, trade union fees with written authorization from the employee, and contributions to the Prime Minister's National Relief Fund. A very important safeguard is that total deductions in any wage period shall not exceed 50% of wages. Any excess may be recovered as prescribed. Rules on fines, Section 19. Section 19 lays down strict rules on fines. There are 4 important aspects. Point 1, prior approval required. Fines can only be imposed for acts or omissions that have been specified and approved by the appropriate government. The list of such acts must be displayed on the premises of the establishment. Point 2, show cause opportunity. Before any fine is imposed, the employee must be given an opportunity to explain their side of the matter. Point 3, limits on fines. The maximum fine in any wage period is 3% of wages. No fines may be imposed on employees under 15 years of age. Fines cannot be recovered in installments or after 90 days. Point 4, utilization. All amounts collected as fines must be recorded in a register and used only for purposes that are beneficial to employees, as approved by the prescribed authority.
Deductions for absence, damage, and services. This slide covers 3 specific types of deductions. Under Section 20, absence from duty, a deduction for absence from duty can only be made for the actual period of absence from the required place of work. The amount must be proportional to the period of absence. If 10 or more workers absent themselves without due notice, an additional deduction of up to 8 days' wages may be made in lieu of notice. Under Section 21, damage or loss, the deduction shall not exceed the actual damage or loss caused by the employee's negligence. Before any deduction is made, the employee must be given a show cause opportunity. Under Section 22, services rendered, deductions for house accommodation or other amenities are only allowed if these were accepted as a term of employment. The deduction shall not exceed the value of the service supplied.
Deductions for advances and loans. Section 23 deals with deductions for advances, and Section 24 deals with loans. For advances given before employment, these are recovered from the first complete wage period payment, except for traveling advances. For advances given after employment, these are subject to conditions as prescribed. For loans, such as those for house building or other approved purposes, the deduction, including the rate of interest payable, shall be as prescribed. It is also important to note that the provisions of Chapter 3 do not apply to government establishments unless specifically notified. Chapter 4. Payment of bonus. We now move to Chapter 4, which covers the payment of bonus. Every employee whose wages do not exceed the notified amount and who has put in at least 30 days of work in an accounting year is entitled to an annual minimum bonus. This is an important right that the Code ensures for all eligible employees. Bonus eligibility and rates, Section 26. Section 26 explains the eligibility and rates for bonus payment. The minimum bonus is 8.33% of wages earned in the accounting year, or 100 rupees, whichever is higher, and this is payable regardless of whether there is an allocable surplus. The maximum bonus that can be paid is 20% of wages earned in the accounting year, and this applies where the allocable surplus exceeds the minimum bonus amount. An employee must have worked at least 30 days in the accounting year to be eligible for bonus. For employees whose wages exceed the notified ceiling, the bonus is calculated as if their wages were the notified amount or the applicable minimum wage, whichever is higher. New establishments. Bonus provisions. Section 26. Section 26 also contains special provisions for new establishments. The rules are applied in phases. During years 1 to 5, that is, the first 5 years after the first sale of goods or services, bonus is payable only in years where the establishment earns an actual profit. During years 6 and 7, modified set-on and set-off provisions apply. From year 8 onwards, the full standard bonus provisions apply. It is also noted that trial run production is excluded from consideration. This phased approach recognizes the challenges faced by new businesses in their early years. Proportionate bonus and working days, Sections 27 and 28. This slide covers 2 related provisions. Point 1, proportionate bonus reduction under Section 27. If an employee does not work the full year, the minimum bonus is reduced proportionately. This ensures that bonus is fairly calculated based on actual working days. Point 2, computation of working days under Section 28. When calculating working days for bonus purposes, the count includes periods of layoff, paid leave, temporary disablement, and paid maternity leave. This is an important protection that ensures employees are not unfairly penalized for absences that were beyond their control. Disqualification for bonus, Section 29. Section 29 specifies the grounds on which an employee may be disqualified from receiving bonus. An employee shall be disqualified if they are dismissed from service for any of the following: fraud, riotous or violent behavior while on the premises of the establishment, theft, misappropriation, or sabotage of any property of the establishment, or conviction for sexual harassment. These disqualifications reflect the importance of maintaining integrity and safety in the workplace. Allocable surplus and bonus payment, Sections 31 through 33. Sections 31 to 33 deal with the allocable surplus and bonus payment. The allocable surplus is defined as follows. For banking companies, it is 60% of the available surplus. For all other establishments, it is 67% of the available surplus. The available surplus means the gross profits for the year after deducting prior charges such as depreciation, direct tax, and other prescribed sums. The audited accounts of companies shall not normally be questioned. Where there is a dispute on the amount of bonus, the notified authority may call upon the employer to produce the balance sheet. However, the authority shall not disclose its contents without the employer's agreement. Set on and set off of allocable surplus, Section 36. Section 36 introduces the mechanism of set on and set off of allocable surplus. This is a two-direction mechanism. When the allocable surplus in a year is more than the maximum bonus payable, the excess is set on and carried forward for use in future years. When the allocable surplus in a year is less than the minimum bonus payable, the shortfall is set off and carried forward. An important rule is that the earliest carried forward amount is always used first. The central government prescribes the manner of set on and set off for all cases. Adjustments and deductions from bonus, Sections 37 and 38. Sections 37 and 38 deal with adjustments and deductions from the bonus amount. Under Section 37, customary or interim bonus. If an employer has already paid a puja bonus, any other customary bonus, or a part of the code bonus before the due date, that amount can be deducted from the total bonus payable. The employee then receives only the remaining balance. Under Section 38, misconduct causing financial loss. If an employee is found guilty of misconduct that caused financial loss to the establishment, the employer may deduct the amount of the loss from the bonus payable for that accounting year only. The employee receives the balance, if any. Time limit for payment of bonus, Section 39. Section 39 sets a clear time limit for payment of bonus. All bonus amounts must be paid by crediting the employee's bank account within 8 months from the close of the accounting year. There are some additional provisions as well. The appropriate government may extend this period up to a total of 2 years if there is sufficient cause. Where a bonus dispute is pending, the employer must pay the bonus within 1 month of the award becoming enforceable. If the dispute is about whether a higher rate of bonus should be paid, the employer must still pay the minimum bonus of 8.33% within 8 months. Public sector establishments and bonus, Sections 40 and 41. Sections 40 and 41 deal with bonus provisions for public sector establishments. Under Section 40, when bonus applies to public sector establishment, bonus provisions apply to a public sector establishment where it competes with the private sector and earns at least 20% of its gross income from such competitive sales or services. In such cases, the bonus provisions apply in the same manner as for private sector establishments. Under Section 41, exemptions. Bonus provisions do not apply to employees of the Life Insurance Corporation, seamen, dock workers, employees of central, state, or local authorities, employees of the Red Cross, universities, hospitals, and chambers of commerce, employees of the Reserve Bank of India, employees of specified public sector financial institutions, and those involved in inland water transport on international routes. The chapter applies only to establishments with 20 or more persons. Chapter 5. Advisory Boards. We now come to Chapter 5, which deals with advisory boards. Under this chapter, the central government shall constitute a central advisory board, and every state government shall constitute a state advisory board. These boards are set up to advise on minimum wages, employment opportunities for women, and other matters covered under this code. Composition of advisory boards, Section 42. This slide introduces Section 42, which covers the composition of advisory boards. The advisory boards are structured to ensure balanced and fair representation from all key stakeholders involved in employment and wage-related matters. The composition ensures that employers, employees, and independent members all have a voice in advising on wage and employment issues. Functions of advisory boards, Section 42. Section 42 also defines the functions of the advisory boards. These boards have 3 main roles. First, minimum wages. They advise on the fixation or revision of minimum wages and connected matters. Second, women's employment. They advise on increasing employment opportunities for women and on the extent to which women may be employed in specified establishments. Third, other code matters. They advise on any other matter relating to this code that is referred to them by the central or state government from time to time. Additionally, the State Advisory Board may constitute committees and subcommittees for specific purposes. An important requirement is that 1/3 of all members of the Advisory Board must be women. Chapter 6, Payment of Dues, Claims, and Audit. We now move to Chapter 6, which deals with payment of dues, claims, and audit. Section 43 of this chapter states that every employer must pay all amounts required under this code. If the employer fails to make such payments, the proprietor of the establishment, whether it is a company, firm, association, or any other person, shall be held responsible for making the payment. Payment of undisbursed dues, Section 44. Section 44 deals with the payment of dues that could not be disbursed to an employee. If such amounts arise, they are handled in two ways. If the employee has nominated someone, the amounts are paid to that nominated person. If no nominee is available, the amounts are deposited with the prescribed authority. This provision ensures that employees' dues reach the right person even in difficult circumstances. Claims, Section 45. Section 45 lays down the process for filing and resolving claims. Point 1. Filing. An application for a claim may be filed by the employee, a registered trade union, or the inspector-cum-facilitator. The application must be filed within 3 years of the claim arising. Point 2. Authority appointed. The appropriate government appoints one or more authorities of a rank not below gazetted officer to hear and decide claims. Point 3. Compensation. The authority has the power to order compensation of up to 10 times the claim amount. Claims must be decided within 3 months. Point 4. Recovery. If the employer fails to pay after an order is passed, the authority issues a certificate of recovery to the collector or district magistrate for recovery as arrears of land revenue. Disputes, audit, and presumption of accounts, sections 46 to 48. Sections 46 to 48 deal with disputes, audit, and the presumption of accuracy for accounts. Under Section 46, industrial disputes, any disputes related to the fixation of bonus, eligibility for bonus, or the application of the code to public sector establishments are considered industrial disputes under the Industrial Disputes Act, 1947. Under Section 47, presumption of accuracy, duly audited balance sheets and profit and loss accounts of corporations and companies may be presumed to be accurate by the authority, tribunal, or arbitrator. Trade unions may seek clarification on any item. Under Section 48, for non-corporate employers, the authority may direct an audit if the accounts are not already audited. Appeals, Section 49. Section 49 provides for appeals. Any person who is aggrieved by an order passed by the claims authority may appeal to the appellate authority. The appeal must be filed within 90 days of the order. The appellate authority must be at least one rank higher than the claims authority. The appellate authority shall endeavor to dispose of appeals within 3 months. Any outstanding dues under an appellate order are recovered by the claims authority through a certificate of recovery. Records, returns, and notices, Section 50. Section 50 sets out the obligations of employers regarding records, notices, and wage slips. There are 4 requirements. First, register. The employer must maintain a register containing details of persons employed, the muster roll, wages paid, and other prescribed details. Second, notice board. The employer must display an abstract of the code, category-wise wage rates, the wage period, the date and time of payment, and the name and address of the inspector-cum-facilitator. Third, wage slips. The employer must issue wage slips in the prescribed form and manner. Fourth, exception. These provisions do not apply to employers with 5 or fewer persons employed for agriculture or domestic purposes. However, such employers must produce proof of payment when demanded. Chapter 7, Inspector-cum-facilitator. We now come to Chapter 7, which covers the inspector-cum-facilitator. The appropriate government may appoint inspector-cum-facilitators by notification. These officers are deemed public servants under Section 21 of the Indian Penal Code and exercise their powers throughout the state or within assigned geographical limits. Powers of Inspector-cum-facilitator, Section 51. Section 51 outlines the powers of the inspector-cum-facilitator. They have 4 key powers. First, advise and inspect. They may advise employers and workers on compliance with the code and inspect assigned establishments as per government guidelines. Second, examine and require information. They may examine persons found on the premises who are believed to be workers and may require information, such as names and addresses. Third, search, seize, and copy. They may search, seize, or take copies of registers, wage record, or notices that are relevant to an offense under this code. Fourth, report defects. They may bring to the notice of the appropriate government any defects or abuses that are not covered by existing law. Additionally, the appropriate government may provide for a web-based inspection scheme with randomized selection of inspections.
Chapter 8. Offenses and Penalties. We now enter Chapter 8, which deals with offenses and penalties. An important procedural rule is that no court shall take cognizance of any offense under this code unless a complaint has been made by or under the authority of the appropriate government, an authorized officer, an employee, a registered trade union, or an inspector cum facilitator. Furthermore, no court inferior to a metropolitan magistrate or a judicial magistrate of the first class shall try offenses under this code.
Penalties, Section 54. Section 54 specifies the penalties for various offenses. Offense 1, paying less than the amount due. For a first offense, the penalty is a fine of up to 50,000 rupees. For a repeat offense within 5 years, the penalty is imprisonment of up to 3 months and or a fine of up to 1 lakh rupees. Offense 2, contravening any other provision of the code. For a first offense, the penalty is a fine of up to 20,000 rupees. For a repeat offense within 5 years, the penalty is imprisonment of up to 1 month and or a fine of up to 40,000 rupees. Offense 3, non-maintenance or improper maintenance of records. For a first offense, the penalty is a fine of up to 10,000 rupees. An important note is that before prosecuting an employer for record-keeping offenses, the inspector cum facilitator must first give the employer a written direction with a timeline for compliance. This opportunity is, however, not available if the same violation is repeated within 5 years.
Offenses by companies and composition, Sections 55 and 56. Sections 55 and 56 deal with offenses by companies and the settlement of offenses. Under Section 55, corporate liability. When a company commits an offense, every person who was in charge of and responsible for the company's business at the time of the offense is deemed guilty, unless they can prove that the offense was committed without their knowledge and that they exercised due diligence. Directors, managers, or secretaries who consented to or helped in the offense are also liable. Under Section 56, composition of offenses, offenses that are not punishable with imprisonment alone may be settled. This is called composition, by a notified gazetted officer for 50% of the maximum fine. This option is not available for second or subsequent offenses within 5 years. If the composition takes place before prosecution, no further proceedings can be initiated. If it takes place after prosecution has begun, the court is notified and the accused is discharged.
Power to impose penalty, Section 53. Section 53 gives the appropriate government the power to appoint an officer, not below the rank of undersecretary, to conduct inquiries and impose penalties for certain offenses. These offenses specifically include underpayment of wages, record-keeping violations, and non-compliance with composition orders. The officer has the power to do this without the matter going to a court. Such an officer has the power to summon persons and require them to produce documents. If the officer is satisfied that an offense has been committed, they may impose the applicable penalty. Chapter 9. Miscellaneous Provisions. We now come to Chapter 9, which deals with miscellaneous provisions. This chapter covers a range of protective and procedural provisions that help ensure the integrity and enforceability of the code as a whole. Bar of suits and good faith protection, Sections 57 and 58. Sections 57 and 58 provide two important protections. Under Section 57, bar of suits, no court shall entertain any suit for recovery of minimum wages, deductions, wage discrimination, or bonus where the claim is already subject to proceedings under this code, has already been decided under this code, or could have been recovered under this code. This prevents duplicate legal proceedings. Under Section 58, good faith protection, no suit, prosecution, or legal proceeding shall lie against the appropriate government or any of its officers for anything done in good faith under this code. This encourages officers to act decisively and without fear. Burden of proof and contracting out, Sections 59 and 60. Sections 59 and 60 deal with two important principles. Under Section 59, burden of proof, where a claim is filed for non-payment or underpayment of wages or bonus or for unauthorized deductions, the burden of proving that dues have been paid lies on the employer, not the employee. This is a strong protection for workers. Under Section 60, contracting out, any contract or agreement by which an employee gives up their right to any amount or bonus due under this code shall be null and void. That is, it has no legal effect insofar as it tries to remove or reduce any liability to pay under this code. Employees cannot be made to sign away their legally protected rights. Overriding effect and delegation, Section 61 and 62. Sections 61 and 62 deal with the overriding effect of the code and the delegation of powers. Under Section 61, overriding effect, the provisions of this code shall have full effect, even if they are inconsistent with anything in any other law, award, agreement, settlement, or contract of service. This code takes precedence over all such documents. Under Section 62, delegation of powers, the appropriate government may delegate its powers under this code to subordinate officers, authorities, or, in the case of the central government, to state governments or their officers, through a notification specifying the matters and conditions of such delegation. Employers' defense and asset protection, Sections 63 and 64. Sections 63 and 64 provide two important safeguards. Under Section 63, exemption of employer. An employer who is charged with an offense may bring the actual offender before the court. If the employer can prove that they exercised due diligence and that the offense was committed without their knowledge or consent, the actual offender shall be convicted and the employer shall be discharged. Under Section 64, protection of assets, amounts deposited by an employer with the government as security for a contract, as well as dues from the government under that contract, are protected. They cannot be attached for any debt or liability other than those towards employees employed under that very contract. Central government directions and savings, Section 65 and 66. Sections 65 and 66 deal with the powers of the central government and the preservation of certain existing laws. Under Section 65, Central Directions, the central government may give directions to state governments for the implementation of this code. State governments are required to follow such directions. Under Section 66, Savings, nothing in this code shall affect the provisions of the Mahatma Gandhi National Rural Employment Guarantee Act, 2005, or the Coal Mines Provident Fund and Miscellaneous Provisions Act, 1948, or any scheme made under these laws. These acts continue to operate independently. Rulemaking powers, Section 67. Section 67 empowers the appropriate government to make rules for carrying out the provisions of this code, subject to prior publication. The appropriate government may make rules on the following matters: wage calculation manner and norms, fines, including approval, exhibition, procedure, and the register, deductions for absence, damage, advances, and loans, advisory board procedures and terms of office, claims, appeals, registers, and wage slips, and powers of the inspector cum facilitator and the composition of offenses. The central government may additionally make rules on floor wage fixation and consultation with states, set on and set off for the 6th and 7th accounting years, gross profit calculation for bonus, prior charges deductible from gross profits, and the manner of holding inquiries under Section 53. Parliamentary oversight of rules, Section 67(4). Section 67(4) ensures that rules made by the central government are subject to parliamentary oversight. Every rule made by the central government must be placed before each House of Parliament for a total period of 30 days, which may be spread across one or more sessions. If both houses agree to modify or annul a rule before the expiry of the following session, the rule shall have effect only in its modified form, or shall have no effect at all. Rules made by state governments must be placed before the state legislature as soon as possible after being made. Power to remove difficulties, Section 68. Section 68 gives the central government the power to remove any difficulties that arise in implementing this code. If any difficulty arises in giving effect to the provisions of this code, the central government may, by order published in the Official Gazette, make provisions that are not inconsistent with the code in order to remove that difficulty. However, there is an important limitation. No such order can be made after the expiry of 3 years from the date this code came into force. Every such order must also be placed before each House of Parliament.
Repeal and savings, Section 69. Section 69 formally repeals 4 acts and contains savings provisions to ensure continuity. The 4 acts that are repealed are the Payment of Wages Act, 1936, the Minimum Wages Act, 1948, the Payment of Bonus Act, 1965, and the Equal Remuneration Act, 1976. Under the savings provisions, anything done under the repealed laws, such as notifications, appointments, orders, and wage amounts, shall be deemed to have been done under the corresponding provisions of this code and shall remain in force until repealed or superseded. Additionally, Section 6 of the General Clauses Act 1897 applies to these repeals, ensuring that all rights and liabilities accrued under the old laws are preserved.
The Code on Wages, 2019, Summary. We now come to the concluding slide, a summary of the Code on Wages 2019.
This is a landmark consolidation of India's wage legislation. The code brings together 4 acts into one comprehensive framework covering minimum wages, payment of bonus, and equal remuneration, extending these protections to all employees across India. The code ensures universal coverage. It extends to the whole of India across all establishments. It guarantees gender equality by prohibiting wage discrimination on the grounds of gender. It provides worker protection through minimum wages, timely payment, and regulated deductions. And it ensures enforcement through inspector-cum-facilitators, claims authorities, and appellate mechanisms that ensure compliance. This code is a strong step forward in protecting the rights and dignity of every worker in India. Thank you.